financial analyst this morning. Keith Springer is joining us live. And let's take a look at the big board. Keith, what's it doing right now?
You know, the market, you had a great story on the sequester, and the market seems to be ignoring the sequester, going more towards the stimulus. Last week we had a little bit of a scare. We're up today. We had a little bit of a scare that Bernanke and the Federal Reserve was going to shut the spigot off. No more stimulus, no more quantitative easing. And then on Friday he started hinting that, oh no, wait, we're going to keep spending, going to keep printing. Market started going up on Friday, and this is a runoff from that. We've got the market up today, ignoring the sequester debate, which is going to get dangerous as we get close to Friday. But right now, it's all about further stimulus, quantitative easing, and the market has confidence they're going to continue to spend, so it's going up right now.
Keith, I'm going to throw a curve at you because it's not really markets, but it is money, and it's what I was just saying a couple of minutes ago. The outlays of cash by our federal government have doubled in the last 10 years. We're spending twice as much now as a government than we were 10 years ago. And this cut we're looking at is 2.5%. Why is it that the world is going to crumble if we cut 2.5% out of a budget that's doubled in the last 10 years?
It just has to do with spending cuts across the board, which if you spend less on top of the tax increases that went into effect at the end of the year, it means less money that gets spent by everybody. Doesn't matter if you're rich and you're buying steak or if you're on food stamps buying canned goods, everybody spends a little bit less. And with the consumer accounting for 70% of the economy, if we get a little bit of less spending for everybody, the whole economy gets hurt. And even a little bit at a time, small percentages make a huge difference. They're saying these cuts alone could shave almost a full percentage point off of GDP, gross domestic product, which is the growth of the country. We're only at about 1.5 anyway, so if you take that back, we could be in negative territory. It's true you need much deeper spending cuts. They've got to get to the entitlements. They've got to start cutting Medicare, Medicaid, Social Security. But if they don't cut somewhere and start, we're all going to be in a little bit of trouble.
All right. I appreciate a little philosophy there. Thank you very much, Keith. We'll catch you tomorrow. And if you want to get practical and let Keith work with you on your finances, or if you have a question, send it to money@fox40.com, or you can call him up during the day at 916-925-8900.
And now let's get to Sheldon Norvis in the Fox 40 Traffic Center.
And we see delays stacking up in the slower lane.